Hello and good afternoon. This is Holly, live from 𝐊𝐴𝐴 studio, and you're watching the Mid-Market Pulse. Let's get started with the mid-market commentary. The Australian shares slipped in red in the mid-market trade on Monday after hitting a record 7,200 level for the first time in its history this morning. The market witnessed subdued trade as investors remain cautious ahead of a raft of economic data, which will have an impact on the market. The ASX 200 is trading lower by 6.30 points at 7,173.20, pairing early gains. During the day's trade so far, the index hits a record high of 7,203.30 and a low of 7,167.40. Over the last 5 sessions, the index has gained 1.75% and is currently 0.48% of its 52-week high. The market breadth indicating the overall strength of the market was weak, with 8 of 11 sectoral indices trading in red. The energy sector was the top loser on the ASX, declining 1.35%. And information technology, industrials, financials, telecommunications services, utilities, consumer staples are also reeling under the selling pressure. On the flip side, the healthcare sector is the top performer, gaining 0.8% intraday and 0.78% over the past 5 sessions. Materials and REITs are among the other top gainers on the ASX. Concerns about high inflation have loomed over the global equity markets in recent weeks, and investors now await quarterly GDP estimates and RBA policy announcements to gauge price pressure. The Reserve Bank of Australia is expected to maintain a status quo on key rates and reiterate its dovish bias when it will announce monetary policy on Tuesday. Sector-wise, the ASX-listed energy stocks Beach Energy and Santos are down over 1% each after the crude oil prices fell on Friday, while WTI crude oil dipped 0.8% to $66.32 US a barrel. The Brent crude oil price fell 0.7% to $68.72 a barrel. And gold mining stocks are trading higher owing to the higher gold price, while Northern Star Resources rises 2.25%. Newcrest Mining share price gains over 1%. The spot gold price is currently up 0.25% to $1,909.07 an ounce. Let's now zoom our lens on the top gainers and losers of today's trading session. Gold miner Resolute Mining Limited is the top percentage gainer on the ASX, rising 5.1% to 61.5 cents. And Domino's Pizza Enterprises Limited, Blackmores Limited, Pro Medicus Limited, and Regis Resources Limited are among the other notable gainers on the ASX. Meanwhile, tech firm Nuix Limited is the worst performing stock on the ASX, tumbling 16% to $2.81. Link Administration AMP Limited, Austell Limited, and Domain Holdings Australia Limited are among the other losers on the ASX. Now, let's talk about shares which are in the news today. Financial research firm Citi has lowered FY23 earnings outlook of Fortescue Metals Group, citing a delay in the iron ore project. It has cut FMG's FY23 core net profit estimate by 3.9% to $4,666.9 million, and has affirmed neutral rating with a price target of 21.80 Australian. This is in reaction to the company's delayed start of its Iron Bridge magnetite project in Western Australia. Following the announcement, shares of Fortescue Metals are trading up by 0.25% at $22.18. Nuix Limited share price tumbled over 16% to $2.81 after the software company reduced its FY21 guidance. FY21 revenue is now expected to be in a range of 173 million to 182 million, while EBITDA guidance is to remain unchanged between 64 million and 66 million. In a separate deployment, the tech company has ended its consultancy agreement with its co-founder and former chair, Dr. Tony Castanga. Link Administration has announced that its online property settlements firm, Property Exchange Australia, or PEXA, will undertake an IPO by the end of June this year. The announcement came after speculation was rife last week that PEXA is all set to go public. If successful, this could be Australia's biggest IPO of the year. Last week, private equity firm KKR proposed a takeover offer, valuing the business at $3 billion. Following the announcement, shares of Link are down 4.80% at $5.19. Before I share more news on the ASX listed stocks, it's time for a short break. At 𝐊𝐼NE TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐼NE TV.
Crypto talk by 𝐊𝐼NE. The crypto market has been red hot given the Bitcoin rally since the past year. And now the most famous cryptocurrency has got competitors, Dogecoin and Ethereum. If the crypto market excites you, tune in with me, Sage, to know the latest developments about the existing digital currencies and the new ones that are joining the race. I'll help you understand the opportunities and the risks the crypto market has in store for you. For all the digital currency related developments, continue watching Crypto Talk by 𝐊𝐼NE.
Hi and welcome back. I'm Holly and you're watching 𝐊𝐼NE TV live from Sydney. This is the Mid-Market Pulse. The share price of Domain Holdings Australia Limited fell as much as 3.8% to $4.86 after Link Administration rejected the PEXA deal. The property classifieds operator stated it was no longer bidding for a 10% stake in PEXA after being notified that PEXA's sale process had been dropped. The company was a part of the consortium with US private equity giant KKR and 𝐶KRN that offered more than $3 billion for PEXA. And Australian-based Global Energy Ventures Limited and ILF have executed a Memorandum of Understanding, or MOU, for the identification and development of green hydrogen projects in Europe and Australia, including a compressed hydrogen shipping solution. Boosted by the development, shares of Global Energy Ventures rose over 4% to 7.6 cents, while the share price of Zimi Limited trades higher by 5% to 2.1 cents after the company secured a $200,000 device order from Steel Line. The company, in exchange for filing, said it has received purchase orders from Steel Line garage doors for 3,250 devices, that is, controllers, sensors, and Zimi Cloud Connects worth over $200,000. The delivery is expected from November 2021 onwards. Shares of 𝐾 Dairy Corporation Limited advanced as much as 7.4% to 14.5 cents, its highest since the 24th of March. The dairy processor has reported a record sale growth across all divisions of 𝐾, with sales totaling 50.7 million. The company has also reported a new contract win with major retailers in Australia and New Zealand, as well as international brands. More than $15 million in material new contracts signed through FY21. And now let's move on to the crypto market. The cryptocurrency market started the week on a positive note, with the price of major digital coins flashing in green. Bitcoin, the largest cryptocurrency by market value, is trading at around $34,797, rising over 1% in the latest 24 hours. The price of Bitcoin moved in a tight range of $34,425.16 as US in the past 24 hours. The price movement has been stuck below the 40K mark for the past week. Ether, the second largest crypto, is trading higher by 2% at 2,318. While the Shiba Inu-based meme currency Dogecoin is also trading marginally higher by 0.6% at 0.298 cents US. But before I share some key events to watch out for this week, it's time for another short break. At 𝐊𝐶𝐞 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐶𝐞 TV.
Property by 𝐊𝐶𝐞. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on 𝐊𝐶𝐞 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐶𝐞.
Hello and welcome back. I'm Holly and you're watching 𝐊𝐶𝐞 TV live from Sydney. This is the Mid-Market Pulse. Let's have a look at the global markets. Key events to watch out for this week. Australian macro number from monetary policy to GDP numbers for the March quarter. Australia is set to witness a high-octane week at the beginning of June. During the week, the country would also release retail sales numbers, an indicator of consumer spending in the country. As for the Swiss growth numbers, Switzerland, one of the richest countries in the world, is set to announce its March quarter GDP estimates. On a 50-point basis, contraction in the economy of the country compared with the 30 BPS growth in the corresponding quarter last year. As for German retail sales, well, the Statistisches Bundesamt Deutschland would be releasing the retail sales numbers for Germany this week, a measure of changes in the sales of the German retail sector. It shows the performance of the retail sector in the short term. A key gauge for determining consumer sentiment and spending is the German retail sales are likely to contract by 30 basis points. And as for American jobs data, the US is set to release jobs data as analysts suggest payrolls may have risen by 650,000 in May. That is almost double the last gain of 266,000, though still a moderation from the million-plus increase. And moving on to the next big news, the ASX 200 braces for a high-octane week of macro data announcements. Well, on Thursday afternoon, Australian Central Bank, the Reserve Bank of Australia, is set to announce its monetary policy decision. As Australia has been pushing for a faster economic recovery over the course of COVID-19 pandemic, the RBA has worked in tandem with the government for increasing credit flow into the economy in a bid to boost growth. Analysts state that the RBA, in all likelihood, would be holding on to the interest rates at a near zero level of 10 basis points. On Wednesday, Australia will announce the gross domestic product numbers for the March quarter. According to the norms, the Australian Bureau of Statistics releases the data 65 days after every end of the quarter, and estimates suggest that the Australian economic growth is set to slow down to 2.5% in the March quarter from 3.1% in the preceding quarter. Next day, on Thursday, the ABS will announce the retail sales numbers for the month of May. Retail sales are used as a primary tool to gauge the consumer spending in the country and is released within almost 35 days after the end of the month. Australian retail sales make up almost 80% of total retail turnover in the country and have a significant bearing on inflation and GDP. It has a direct correlation with inflation and the growth prospects, and also helps the Reserve Bank of Australia to determine the interest rate decision and currency valuation. In March of 2021, the retail sales had grown 1.1%. Other than these three major events, the country is likely to announce its PMI numbers, export and import numbers as well. But before I share a special report on joblessness in Australia, it's time for another short break. At 𝐊𝐶𝐞 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐶𝐞 TV. Hi and welcome back. I'm Holly and you're watching 𝐊𝐶𝐞 TV live from Sydney. This is the Mid-Market Pulse. Let's have a look at this special report. Joblessness in Australia is down to pre-pandemic levels. The joblessness in Australia has come down to the pre-pandemic levels as the country marked its biggest dip in unemployment in 4 years during the month of April. At the end of April, 763,177 Australians were unemployed, 8.4% down from 832,000 jobless in March, according to the data released by the ABS. The current reduction in the number of unemployment has dragged the joblessness back to pre-pandemic levels. In the month of February 2020, before COVID struck, there were 761,145 jobless people in Australia. However, as the country imposed lockdown, the joblessness spiked to 994,680 in July of 2020. This is the third consecutive month when joblessness in Australia has dropped. The dip in April was the largest in 60 months. The last time unemployment was so low was almost 50 months back in 2017, when it had dipped by 9%. According to the unemployment people, 411,000 were men and 351,000 were women. Of the unemployment people, 311,000 men and women were looking for full-time jobs. However, 31% of unemployed were seeking temporary work. Meanwhile, ABS reported last week that the unemployment rate in the country has fallen for the third consecutive month to 5.5 as the nation recorded a return from the economic damage wrought by COVID. Both Australian and state governments have been trying hard to bring joblessness below the 5% comfort level through budgetary and non-budgetary measures. Alright then, that is all for now. Stay tuned with 𝐊𝐴𝐼𝐼𝐼 TV for more live market updates. We'll be back with more news on the markets, economy and diverse themes and sectors. This is Holly Shields signing off.